Let's get to our next guest, who happens to be an economist, so it's lucky that he's here. We're going to talk right now with Bank of Tokyo-Mitsubishi Chief Economist Chris Rupkey. What do you think about, and I didn't really want to talk about regulation reform with you so much as I did the economic numbers we got today, but what do you think about regulation reform here? How possible is it to get it to be completely free of political influence?
I think it's going to be a long slog trying to get this sort of any legislation passed. Part of me thinks that this is something that comes through once a century, the financial market crisis last fall. With or without legislation, the too big to fail idea, I don't think any government entity is going to allow something like a Lehman to go bankrupt again. So whether or not you get the laws in place for a wind down or not, it's unlikely, number one, that we're going to see conditions like we saw for another 100 years last fall, and number two, I think they'll find some way to keep these firms from going under.
But what if we see, and a lot of people have been talking about this today, another spike here in foreclosures? We've had Whitney Tilson on the past. He said $1.6 trillion worth of option arms are going to reset over the next couple of years. That could prompt another spike in foreclosures, and banks, some people are saying, already would be insolvent if they had to really mark their assets to market.
Yeah, I think most of these banks would like to let the losses accrue over time in the mortgage type of assets. I don't think they want to try. I mean, if you market to market now, sure, they would be undercapitalized, but I think they'll take the losses slowly over time. The foreclosure idea is interesting. Delinquency rate nationwide, I think, was 9% recently in the first quarter. In the 1981-82 recession, delinquency went to 6%. And by the way, that wasn't a very good cyclical indicator, because delinquencies rose after the end of the 81-82 recession, kept rising, even though we had a booming economy. So I don't know if this is enough. The delinquency rate rising is enough to slow the economy and keep us from going into full recovery starting in the third quarter, which, by the way, starts tomorrow, July 1.
You do think, though, that the delinquencies we're seeing now are tied, or the foreclosures we're seeing now are tied to the jobless picture.
Yes.
And you expect the unemployment rate to peak in the next couple of months, if I read you right.
Yeah, I think the reason the delinquency rate is 9% now versus the bad recession in the 80s where it was 6%, I think, is a subprime problem. But after the subprime delinquencies and ultimately foreclosures get through the system, then we have to worry about the job losses. If you don't have a job, you can't pay your mortgage. But I'm pretty optimistic here that the let me just check with myself. Yeah, I'm pretty optimistic that the unemployment rate is very close to peaking. Continuing unemployment claims hit a high the other week, early June, and it looks like that's a peak. If so, the unemployment rate must be within a month or two, and I'm being generous with that, of hitting the peak. I think the peak could be right around now, right now.
And right around, let's see, Peter Bookvar today said he expects us to get up to about 9.6%. That would be, and I think Friday. That's consensus, that yes. For Friday, which is actually pulled back to Thursday because we'll be on vacation, hopefully both of us on Friday.
Yes.
That's a climb of only 0.2% over the past month, and we're used to seeing, 0.1% gains every week. Right. So are we going to see it peak around, what, 9.8, less than even 10% possibly?
Yeah, this could be the last month. If it goes up this month, it could be very well be the last month. I know it's fashionable to say, even in the administration's economists, that the unemployment rate could go up over the next year. I'm not sure I buy that. I mean, the tricky thing with the last recession is, sure, the unemployment rate went up and made a new peak 2 years after the end of that recession in 2001, but it was really because we went to war with Iraq, almost causing a new recession. So that doesn't really count. I think the unemployment rate is just about peaking, and then once people see that, they'll gain greater confidence following that.
Are you concerned, though, about, I think what's going to make people hire, companies hire, and then I think it must be when you and I go out and buy our video games or whatever we spend our money on. But we can't do that if we're saving money or if we're out of a job, obviously. And a lot of people, if they're not out of a job, are boosting their savings.
Right. I mean, it's hard to see where the turn comes from. I mean, if you look ahead, it looks like it's all bad news, but these turns come every time. You can't always see it. We can't measure what's going on in the economy. There's 306 million people in the country. It's very hard to measure. I think the burden is on those who say the economy is going to continue to contract because it's kind of trying to hold a beach ball underwater. The economy wants to spring back to life. Our population is growing 1% per year. The economy naturally wants to grow, and I think we're at the stage where almost everyone believes consensus that real GDP is going to be positive in the third quarter. Third quarter starts tomorrow.
All right. Well, we hope it gets better, Chris, and I appreciate having you on. Chris Rupkey there, Chief Economist at the Bank of Tokyo-Mitsubishi.